Welcome to Anchor Point Trading Adventures. I'm going to go through a little bit about the market and talk to you about some of the pullbacks, and then we're going to get into some of the nitty-gritty of what's been going on, what potential buys there are. This is not financial advice. This is for entertainment only. I've been doing this for about 7 to 8 years, and it took me this long to start getting comfortable enough. Now I'm doing much better in the market, and I want to share some of the stuff that I've learned in that time. But this is just for entertainment purposes. This is not financial advice. If you want financial advice, go to go read some books on it. I don't go to a financial advisor that'll tell you to diversify your portfolio and get you nowhere, and then that's what a waste of time that is. Okay, so I'm going to go ahead and put you into the screen here. We're going to go, where is my screen? Okay, so I've made a little bit of changes here. I want to just kind of go through what some of these parameters are. I have it labeled now. This is the S&P 500 up here. This chart is the S&P 500. It's important to have this on my screen so I can see the stock that I'm looking for, how it's doing relative to the S&P 500. So that's what we want to do. You can see the S&P 500 has kind of bounced back up. I also want to quickly talk about the types of, most people are used to candlesticks or lines if you're a real beginner, but I just wanted to talk to you about what these they're called high-low close bars. And essentially, what they show me here, they're just the bar style. But what they show me, it just takes away some of the information. This shows me the low of the day. This shows me the high of the day. You can see up here, I'm on a daily right now. If I go to a weekly, for the very new beginners, this weekly, now each of these lines represents 1 week, okay? If I go to the daily, each of these bars represents 1 day. So this is the low of the day. This is the high of the day. You know what? I'm going to go to the big picture first and just kind of go through where we are. I got to change this back to the bar charts. S&P 500, you can see we did find some support on the 200-day. This is the 200-day moving average. The red line is the 50. The green line is the 20. So it did find some support on the 200-day moving average. And then the NASDAQ found some support. We might get a bounce back. But with that said, we don't know what's going to happen. Let's just kind of play it day by day. I'm going to go now to the candidates that I've seen for this week and kind of go through what I do to analyze, okay? What I'm really looking for is strength against the S&P 500. So you can see the S&P 500 here. It's been going down, and some of the stocks that I've selected have kind of been really showing strength against it. This one here, it found a little bit of support on the 50-day moving average. I like it to stay above the 50-day. I like the 200-day moving average to be rolling upwards. Okay, I don't look at stocks that don't have this rolling upwards. And I like it reaching new highs. So for anyone who thinks it's a good idea to buy when the market is cheaper, okay, or there's a discount in the market because everything's selling off, that's a terrible time to buy a stock. You want to buy the stocks that are strong against the market going down. You certainly don't. It's the game is about lowering the probability of, or increasing the probability of success. And these are the when you break out of a base, we call this a base. You can see, like, let's just go back here. Like, this would have been a nice buy spot. You would have broken out of a big long base. Of course, I don't like the dip here. Yeah, I would have measured that. But just as an example, this would have been a buy spot. This may have been a buy spot if this was tight enough. This was a buy spot. This is a lower cheat, as Mark Minervini calls it. This is the actual buy spot up here at the handle. This is a cup and handle. If you hold it sideways, this would be a cup and handle. You have to kind of imagine it sideways, so the side of the cup would be right here. Okay, so there's a little bit of what I'm looking for, and then the once I find the charts matching up, the technicals look good, and everything tightens up, then I look at the financials from there. So we're just going to go through some of these now. One thing I need it to be is less than 10% from peak to trough. And this one, I mean, it kind of is. It did go really far down, but look at where it closed. Look at where it closed. It closed up higher. Okay, so that's a good bounce back, and then it closed up even higher the next day. And then it came back down about, 4% is a decent amount. I'm going to put that in my maybe list. Now, I do want to keep in mind, too, I want you to keep in mind that just because I put one of these on my buy list doesn't mean I'm going to buy it. Last week, I had a number of them on my buy list, and there's only one that really spoke to me. But these are the potential buys. With this one, what's the ticker here? AEM. What I look for in the financials is the earnings per share, the revenue, and the margin. That's it, guys. That's it. Annuals look good for 2024. That looks great. I like seeing that. Look, the earnings per share this looks like a breakout year. And revenue is continuing to come in slowly. Analysts love this one. They're thinking they're looking at this positively. Looking at growth for this one. Okay, APG. Now I don't like the dip here, and I wish it would have come back a little bit faster. And I definitely don't like this enormous volume. See that volume there? And it closed lower in the day. It didn't close really low, which that's good, but this would have been a nice volatility contraction pattern if it had broken above, but it broke below. So this is off. We're done with that one. We're not doing that. This as well. This is a little bit too loosey-goosey. Look at that, 50%. CRBP. Here we go. We got some CRBP here. This was a super performer. I remember buying this sucker out of here. This one, I don't like how loose that is there. 25% drop. And this is on a daily chart. We need some tightening action before we can buy. I don't buy these volatilities. This needs to be off the list. So dogs. We need some tightening action. This could potentially end up as a volatility contraction pattern. Do I like the way this is set up relative to the S&P 500? I mean, at the worst of the S&P going down, this was coming up. So that's not bad. I am seeing some strength there. And then if we go down and look at the technicals, look at the forecast. This doesn't have a forecast, does it? No, it doesn't. Some of them don't. What's the price on this? Oh, it must be very low. Okay. I don't like stocks below that $12 mark. Okay. The big winners tend to move above $30 after they reach $30 or more. Now, and keep in mind there's splits as well. So sometimes when you see a stock and you might look at one and say, well, this one moved up really, really high. Well, the stock was split down the road, and as a result, when you're looking at it in 2024. And you're looking back when it was like 2008 on whatever stock. This is just an example. That stock price might look like it was lower, but at the time maybe it was $30, $40, $50. But today it looks like $8 because that's what they do. When the price here, I'll give you an example. NVDA. Just a couple weeks ago, NVDA did a 10-to-1 split. Look at that. There it is right there, 10-to-1 split. This would be $1,040 right now. In fact, when we made a little bit of money out of here, it was $1,040. This is what I mean. Look at this volatility contraction pattern out of the base. These are the areas you're trying to catch. Volatility contraction pattern, tightness out of the base. Okay, and then you have a 1-2 punch. Look at this. You're looking for a reduction in volume and then a massive upburst. That's the 1-2 punch. You wind down for the punch and then a massive outburst. This right here is called institutional support. This isn't Uncle Ben sitting in his office. This isn't your aunt, whatever her name is, whatever your aunt's name is, sitting and trying to individually manage her portfolio. This is large institutions trying to get in on massive positions. And this is the signature of what we're looking for. We're looking for institutional support. You can't do this with a bunch of retail traders. You need institutional support. That's essentially what you're trying to do as an amateur trader. You're trying to get on the back of some of these companies that caught the eyes of the institutional money managers, and you're trying to ride that up. Okay, so we're going to get rid of dogs. I don't like this. Look at how far down it is. What is going on here? That is a massive drop over a long period of time. 92%. No. DY. So this one's funny because it came down, but it just shot right back up. I don't know how I feel about it. I almost need it to tighten up a little bit more before it goes out. Now, I need to bring back my lines. I apologize for anyone who doesn't like the lines, but these lines really do help me. So I'll put one over here. I'm holding Alt-V, okay? And that puts in a vertical line. You can adjust the colors on this, and it just remembers it. Yeah, this is a very nice long base. The contraction is getting tighter and tighter. False breakout here. Shakeout over here. It shakes out all the weak holders, the weak investors. And remember, you're a weak investor. You're a weak holder. Okay, you don't want to hold in for the long run. We're not investors here. We're swing traders. We're in and out within weeks. You're in a jet ski. You're not a cargo ship. Okay. You don't have the resources to be a cargo ship. I might actually put in a position on this. This is tightening up nicely. I want to see what happens on Monday. If I do put in a position on this, it's going to be a very tight stop. I want to see this roaring out, and I don't like this. I mean, the close wasn't so bad. Let's go to the 5-minute, see what's going on a little bit closer. Do we get some support at the bottom here? Okay, yeah, we'll leave that one on the list. See how that goes. This one is DYN, and we're just reaching the 15-minute mark, so I'm going to try to speed this up now. DY, you know what I didn't do for DY? I didn't look at the financials. Let's look at the forecast. Analysts are liking this, but remember, I don't know if you watched the last video. If you didn't, analysts need to be conservative by nature as a career. So it should be easy enough to beat analysts' forecasts. That's what these are down here. This is the surprise. This is what was estimated versus what was reported. We want to see these surprises higher. Okay, I'm going to look at the quarterly here, and I want to show you a trick. So if you've been kind of glazing over this, pay attention here. What I'm trying to do is compare this fourth quarter to the fourth quarter of last year. So what I do is I'm going to bring you over to my screen here, and I literally do this. Now you can see me, okay? I hold up my fingers just like that, and I compare on the screen. I look at the fourth quarter of this year versus the fourth quarter of last year, and just kind of helps me do that comparison. So that's how I read these quarterly reports. And what I'm looking for is growth. I'm comparing the fourth quarter, or in this case, the second quarter of 2024 with the second quarter of 2023. Now look at the estimates. This estimate was over here. Yes, the reported is up here. And this estimate is a little bit higher than the reported. That's good, okay? And then the next one, quarter 3, 2024, in comparison with quarter 3, 2023, the estimate is significantly higher, and these are conservative estimates. And what we're hoping for is that it'll be even higher than that. So this looks pretty good to me. I always start off with the annual, and that kind of gives me an overall picture, and then I zoom in. So this looks pretty good to me. I certainly don't like seeing missed estimates. I don't like seeing this one here. But I mean, it made up for it by surprising with 34%. Keep in mind, this is quarter 1, 2024, and it doesn't correspond with this image here. This actually corresponds with this image here. So sometimes you gotta keep that in mind, okay? These numbers are not lined up with these graphs. They should be, but they're not. This looks okay to me. Sales 4% to 9%, earnings per share 14% to 29%. We're seeing growth. Although it did decelerate here, but then it's starting to grow again. And the technicals look good. We're just going to watch it. Right now the market's we're seeing a little mini crash here. I don't know how long it's going to last. So what I want to do is keep myself safe by not exposing too much of my money into the market. Right now, I think I'm at 6% exposed. And last week I was in cash, fully in cash, not a single investment. Okay. We just want to, we want to keep ourselves as safe as possible. It's more about risk management, this game, than anything else. Here's another one. This is another pharmaceutical company. So earnings are fine, but look at this blip up. Wow. Look at that. And there's the 100 mark. You can see 100%, and it maintained above that. It came back down and bounced right here. So I like to look at that as the spot it maintained at. That's 127%. What's the rules for power plays? 100% or more within, I believe, 6 weeks. I'll have to go back at the book and confirm that. But we have maintained 124% within 1, 2, 3, 4, 5, 6 weeks. So this counts as a power play. These are beautiful. This is going to get an extra star in my book here. So I'm going to look at this very seriously. Okay, guys, it's time to wrap it up. We have our list for the week, and I think this company, INSM, which is a pharmaceutical company, is probably at the top of my list right now. And so we'll keep an eye on this. I still need it to tighten up a little bit, but that's the list for this week. Probably none of these will get purchased, but these are the times when the market is dropping down like this to try to find some of the market leaders. The market leaders emerge out of pullbacks in the market. They're the ones that hold relatively well to the S&P 500. And if you can find those when the market starts to turn back up, it really makes a difference. Yeah, that's where you make the big gains, is out of these pullbacks. So don't be too upset about the market right now. This is an opportunity, and we just have to wait to see what happens. And so with that said, have a great week. Trade on, trade hard, but be cautious. And I'll see you guys in the short videos that I make to give you updates. Cheers.